Equity loans can be extremely beneficial to homeowners, not in the least because they allow them to borrow money by using their home as collateral. However, when applying for any type of loan, it is crucial to compare loans beforehand. Getting the best rate is just as important as getting the loan itself. Otherwise, a person might find that he or she winds up paying far too much interest, which could have devastating results. When a person needs to borrow a large amount of money or when he or she does not have a good credit score, equity loans are sometimes the best chance to get a loan. Conversely, in these cases, a person needs to be even more careful about the rate he or she receives. First of all, in order to compare loan rates, it pays to know the difference between a home equity loan and home equity line of credit. Simply put, the former is simply a second mortgage. They are viewed as fairly safe, at least by lenders. A borrower cannot simply disappear and take the house, after all, even if he or she goes into default. However, when a borrower takes the time to compare loans, going into default becomes far less of a risk. With an equity loan or any other type of loan, it pays to compare. Because people can now compare loans online, this task is much more convenient than it has ever been. To begin the comparison process, a borrower should start out by shopping around. This means talking to banks, brokers, and even credit unions to see who offers the best rates. Because a person's credit score now factors in heavily when it comes to getting a good rate or, indeed, even getting approval for a loan, it is essential to keep a close watch on this score. The borrower needs to make sure, first of all, that his or her credit score is accurate. Just as it is easier to compare loans online, it is also quite easy to check out one's credit score. It is not quite as easy to manage and improve it, but it can be done by making payments on time on a regular basis. Finally, the internet is not the only place to look. Interest rates online should also be compared to those offered in advertisements. Then, too, a borrower has to realize that a home equity loan may not be the right choice. When a person does compare loans, then he or she might discover that a credit card account might be the better option. It is always important to remember that this requires putting one's house at risk. An equity loan should only be considered when a person is absolutely sure that he or she will be able to make the payments every month. To that end, it is possible that insurance might cover the payments in the event that something happens. It is also better to pay monthly premiums rather than paying upfront.